discovered the Cypher pattern, right?
Yeah, so here.
Darren, tell us how you discovered it.
Oh man, it actually it was through testing the Gartley pattern. So it was in early days. It would have been 2012. So I'd started working in the trading education business back in 2010, and started doing a lot of strategy development into 2011, 2012 timeframe, and I started doing Fibonacci ratios and pattern recognition. That really stood out to me. So I was in the middle of testing Gartley patterns, and like I kept seeing failures or Gartley patterns that didn't work out. And then there was like, it's just my personality that if everybody is doing one thing, I'm like looking the other direction, or I want to do something different. And so as I was learning pattern formations and that type of thing, I kept thinking, okay, what happens if our B to C leg isn't contained within the X to A leg? And so just kind of allowed my mind to stretch outside of what was generally accepted inside that little niche of our industry. And then it was like, I remember I was sitting in Akil's live trading room. We were hanging out, and like I was testing, and then I saw a certain Gartley pattern set up, didn't end up completing, but it was on like the back end of a major downward move. And I thought, man, I wonder if there's a way, like some type of rule set that I could have caught that move, because I kept seeing it as I was testing patterns. I kept seeing this same kind of formation setup. And so I just started writing out a basic rule set for it. And it was within about 2 hours that I had the basic rules set up for the Cypher, and then started going back and testing. And I had done like, I want to say it was 20 or 30 instances on a Euro USD. I think it was on like the 60-minute or 4-hour chart, and it was hitting at like 85%. I thought, man, okay, this seems pretty good. I'm going to do a little bit more. So I picked up another chart, pound dollar, and started running through that and got similar results. And so I kind of took it to the higher ups inside the company. I said, hey, have you guys ever seen anything like this before? And they're like, no, I haven't. He's like, I think you might be onto something there. And so I continued to do a bunch of testing, spent like the next month or 2 months just running through chart after chart after chart. And I really didn't refine the rules very much from the initial rule set. Like I think the only qualifiers that we put on it were, it was like a specific that the
close points.
Yeah, close points, but like it was always the 786 was our D point. But just I found during the testing that we had a couple of instances where our B to C move, like you would get a big spike on the B to C move, but it wouldn't close above, or I guess depending on which way you're looking at it, it would close lower than where our A point was at. So like we had our X to A move, and then we get a big spike. And so I had to like refine the rules. Well, does it need to close below that point to be considered a valid move? Just a couple things like that. But once I had that final rule set, then we took it to our mastermind group, which was about, I don't know, Akil, was it like 15, 20 traders within that group? Yeah, something like that.
Good ones.
And so,
too, man.
yeah, like really, really good minds, like people that were really into pattern recognition, Fibonacci ratios, people that I could take this rule set and be like, all right, break this, show me what's wrong. Like I'm seeing some really good results, but when you're doing strategy development, like one of the most difficult things is not to fall into that, like that bias, or like
trying to see the winners.
Yeah, like you really, really want it to be good, because you're like, this is something that I created. Like how awesome would it be? And that was one of the challenges when I took it to them. They were like, okay, so you went back, you did testing, and you looked for all the winners. Now go back and specifically look for losers. Like basically just changing your reticular activating system to go back and try to find instances where it failed. And by doing that, it changed our percentage. It wasn't significant. It was like less than 8 or 9%, I think is what it was. But that it was after we had done that, we're like, okay, it's worth showing to everybody. So we took it to the mastermind group, and I basically said, here's the rule set, recorded some videos showing them examples of it, and then put them on their way. And then about a month or two later, like we came back, everybody had been testing it. I mean, they took it out on Forex charts, crude oil, gold, equities, like just trying to find it wherever. And what we saw was like going back to, like I said, it's 2012. We were going back to charts in like 2001 and finding patterns. And so it was pretty cool. But after that month or two, that's when we realized that we got something here. And so we ended up creating a course based on just Fibonacci ratio patterns and released it then. So now it's kind of
Awesome.
taken off
Well,
since then.
and it did take off. Like, what happened with TradingView? Because TradingView developed a tool for it, right?
Yeah, but it's last time I checked it, like they used this Cypher name, but it's not plotting accurately, and I never spent the time to look and see what it was doing wrong.
Right.
I never talked to them like it wasn't something that I was working with them on.
They used their. I remember I brought it up to them.
I've got it
Yeah.
With
chart
their
right
with their
here.
regular pattern tools, because they measure Fibonacci's a little bit differently. So if you use the pattern tool,
Yeah.
you're gonna get some weird ratios. You're gonna get like a 127 that's really at like a 110 or something like that. So
Right.
there was a lot of false C legs. There were a lot of C legs that people were measuring out as 127 extensions, and you're looking at it, you're like, that's way too close, man. And
Yeah.
so I remember I talked to him about, showing him how we do it, how we measure them and stuff like that. I never checked the tool to make sure it was accurate because I just don't care
No,
that much.
I think they
honestly.
did. I think they did change it.
But it,
Did they?
yeah, I think the one that's named Cypher, I think it specifically measures that 127 and the way that we do it. So that's the one that's Cypher, not Pattern Tool or whatever the other name for. But that was pretty cool because they were like, hey, this, once it went out there publicly, and to give credit to Darren, he's not going to put this out there, but there were discussions in the background like, hey, like, should he patent this? Should he sell it or something like that? And he's like, no, just release it. Like, he doesn't want it, didn't want his name on it. He didn't want any copyrights, any patents, anything like that, right? Like other people in this industry, which shall remain nameless. But yeah, he just said, let's put it out there. I think it's just something that we think will help traders, and you know how TradingView is. It got there and it caught fire, but unfortunately, it was like most people, they don't actually take the time to learn it. They kind of just look for the shortcut, and there were just a lot of people doing it the wrong way. So I remember, myself, I know Jason, we catch him on there and leave little, rarely do we comment, but it's like, hey man, just may want to double check that.
Yeah.
And we finally got to the point where we just talked to him about creating a tool just so that traders aren't so traders are doing less dumb stuff than they usually do.
I remember talking to you, Akil, and saying, look, they've figured out the tool. I'm going to do a video on how to use that tool now. And it was my second YouTube video ever. My second YouTube video ever was how to use that Cypher tool on TradingView. And it's still online. It's still there. You can go
I
and,
remember that,
you can
yep.
go and check it.
No, Akil, you kind of hit it. Like a lot of times people say that I created the Cypher pattern, and I don't think of it that way. Like the Cypher pattern exists, like regardless
Yeah.
of my input to it, right? Like it's something
You
that was
discovered
there long. Exactly. Yeah. We created the rules that allow us to find it consistently, but it was there before because it's a pattern of human behavior and human psychology.
Absolutely.
And that's what I think that kind of unlocks a whole new world once you actually get into trading. You've been doing it for a while. You analyze the charts, and for a long time you just look at it. You see this up and down movement, but once you really get into it, you start to see that it's human behavior, and you start to kind of understand what the reactions are. I know I can't remember what webinar we did where I brought in that video of the fight clip, right?
Yeah.
And that's like you start to
Yeah,
see
right.
that when somebody moves against you, there's like that reaction to fight back, and then your reaction to them makes them push back harder. And it was kind of like that idea of the Cypher is this battle between buyers and sellers. When you get a significant push, then they respond back. And I think it's just a natural tendency inside the market to start forming those patterns. And I believe there's more. If you spend time looking through it, there's plenty more patterns in there that you could create your own. We didn't find all of them,
That's what I love about trading. Like, it is just a representation of human psychology, and there's things, and human psychology hasn't really changed for about 3,000 years. So as long as those patterns are there's going to be things that happen frequently in the market, and it's your job to go and identify those things and go, that happens quite a bit. I'm going to build some rules around this so I can capitalize on it consistently over time. And that's essentially all it is. And that's why there are so many ways to make money in trading, and there's no wrong or right. What you won't see myself, Akil, or Darren, or Charles saying is things like, that system's wrong. Like, because that's ridiculous. Like, that's one of the main reasons I hate like forums and trading forums and all that. And YouTube like is absolute poison. Some of the people on comments on there. I know Darren loves YouTube, don't you, Darren?
Oh yeah.
Aaron loves the comment section on YouTube.
But it's just full of people who are giving, you're wrong, that's wrong. No, the market isn't going to do that. And it's just crazy. Like if any trader tells you that they know what the market's going to do or your system's wrong, just literally take their advice with a pinch of salt and run the opposite way. That's my advice. I don't know anyone. I don't know any consistently profitable professional trader who tells people they're wrong. And I've been around a lot of them now.
It's the same thing where people, we're always in this battle between technical analysis and fundamental analysis. And, it's like, one's not wrong, one's not right. It's just different methods. But the people that take that approach to technical analysis and talk about historical testing is worthless because the past can't predict the future. It's so ridiculous. It's like you said, even if you take human behavior out of it, if you just look at numbers, right? Numbers do not lie, and patterns over time, over vast periods of time, do not lie. But when you look at human behavior and you look back at these things, that's all it is. And as human beings, we're pretty predictable. Even when we change very slowly, and we don't change in massive groups. We're pretty predictable, and if you can understand that, I mean, you have an edge in the market. If you can understand it and identify it on the chart, you have an edge in the market. But it just
I totally agree, man. And there's always going to be people that don't need to test, but they're very rare. Very few people don't need that they've just they've got an appetite for risk, they're all right with it, and they're going to go and find their way. Usually they have to have a lot of money to do that because they're going to learn along the way. But look, no one knows what's going to happen in the future, and our job is to just prepare our mind so it's psychologically stable so that we can go forward. So just forget about trading and take this analogy, right? Let's just say that we're going to go for either a bungee jump or a parachute jump, right? And we're going to go, we're in the plane and we've been signed up for it by our partner, and we're going to go and do it tomorrow. And we're in the plane and we get in the plane the next day and we're going up, right? The thing that you're going to want to know is, what's the success rate? What's the death rate? How often does this go right? How often does this go wrong? I just want to know what my odds are, right? And by doing that, you're going to go, oh, okay, so not many people die from parachute jumps. It's very, very rare. It's one of the safest sports. And that's going to ease your mind and allow you to take the jump. Whereas if you don't know any of that stuff, you're going to be a nervous wreck, and you're going to be kicking and screaming, and you're not going to actually do the jump. So going live in trading is having that backup to keep your mindset right so that you can actually at least have some historical black and white data that you can go, okay, I don't know that that's what's going to happen for definite, but it's better than nothing, right? I'd rather go on that than not knowing. And that is essentially what backtesting is. So I don't really understand how anyone can argue the concept of, you don't need to test, or testing doesn't help your trading, because I don't know one successful. I know one successful trader that has never back tested, and he had a lot of money, and he had a massive appetite for risk, and he made it. But other than that, not one person. So, yeah, bit of a tangent, bit of a rant, but yeah, that's how I see it.